This 3 Dividend Kings portfolio will pay your rent. Ever feel like your paycheck disappears the moment you cover rent and a few bills? What if we told you that a simple $10,000 investment could one day generate $2,500 per month, enough to pay your rent for life? Sounds impossible, right? Doesn't have to be. There is a proven way to get there. All you need is the most rock-solid Dividend Kings and the power of compounding. In this video, we're diving into 3 powerhouse Dividend Kings. Each one is a strong income-generating company on its own, but when combined into a single portfolio, they create a powerful wealth-building machine. By the end, we'll show you exactly how this portfolio can turn a $10,000 investment into $25,000 per month in passive income. Ready to unlock this game-changing strategy? Let's get started. What are Dividend Kings? Dividend Kings are the best of the best when it comes to reliable income. You see, these are companies that have increased their dividends for at least 50 years in a row. That means they've gone through recessions, market crashes, inflation, and everything in between. Think about that for a second. Half a century of consistent growing payouts to shareholders. That means they not only survived tough times, but thrived through them. To do that, a company needs strong profits, steady cash flow, and a rock-solid business model. These aren't flashy tech stocks that rise and fall overnight. They're slow and steady, built to last. While their stock prices may not skyrocket like some high-growth companies, their real power is in their dividends, reliable, growing cash payments that can support you no matter what the market is doing. Imagine a portfolio that takes advantage of this, one that combines not 1, but 3 Dividend Kings. Let's begin with NWN. This is the Northwest Natural Holding Company, commonly known as NWN. Established in 1859, NWN has been a cornerstone in delivering natural gas to homes and businesses across the Pacific Northwest, particularly in Oregon and Washington. Their primary focus is on regulated natural gas distribution, ensuring that 800,000 customers receive reliable energy for heating, cooking, and other essential needs. Beyond natural gas, NWN is expanding into water and wastewater services, reflecting their commitment to meeting diverse utility needs. One thing investors love to look out for? Essential companies. And this one is as essential as it gets. However, operating in the utility sector does come with its set of challenges. One significant risk investors should be wary of is regulatory changes. NWN's operations are closely monitored by state commissions in Oregon and Washington, and these regulations can influence how the company sets rates and recovers costs. To navigate this, NWN maintains open communication with regulators. This has ensured transparency and adaptability to policy shifts, while they continue to provide essential services. Financially, NWN has demonstrated resilience. In 2023, the company reported revenues of $1.20 billion, marking a 15.44% increase from the previous year. Net income for the same period was $93.87 million, an 8.7% rise that indicates effective management and operational efficiency. As of February 28, 2025, NWN is sitting at $40.69 per share. Taking a closer look, it is clear that NWN stock has been on a gentle upward climb over the past year, rising about 5.77%. If anything, this steady performance reflects the company's stable operations and its appeal to income-focused investors. NWN offers a solid combination of stability and income. Right now, its dividend yield is 4.73%, meaning investors get nearly $5 in dividends for every $100 invested. That's a strong payout, especially for those looking for reliable income. Dividend growth is slower at just 0.51% per year, but the fact that NWN has consistently raised its dividend for decades speaks to its reliability. When it comes to stock performance, analysts expect an annual return of about 5.02%. That's not a high-growth stock by any means, but for a steady utility company, it's a reasonable expectation. Next is a company that supplies one of the world's most controversial yet enduring products, UVV. Universal Corporation, often referred to by its ticker symbol UVV, was founded in 1918. Headquartered in Richmond, Virginia, Universal has established itself as a global leader in the leaf tobacco industry. Their primary business involves procuring, processing, and supplying various types of leaf tobacco to manufacturers of consumer tobacco products worldwide. Operating in over 30 countries across 5 continents, Universal ensures a consistent and quality supply of tobacco to meet the diverse needs of its clients. In recent years, the company has expanded its portfolio to include plant-based ingredients, catering to the food and beverage industries. This has no doubt diversified its revenue streams and reduced dependence on the tobacco sector. Sounds good, but at this point, one needs to ask about the risks associated with this business. The tobacco industry presents certain challenges, like regulatory pressures and shifting consumer preferences toward reduced tobacco use. Financially, Universal has demonstrated consistent performance. In the fiscal year 2023, the company reported revenues of $2.75 billion, marking a 6.96% increase from the previous year. This upward trend indicates that the company's strategies in navigating the industry challenges are effective. As of February 28, 2025, UVV stock is priced at $53.61, reflecting a decline of 15.66% over the past year. This might seem like a bad thing at first, but for dividend investors, this could actually be a great opportunity. Since UVV already has a strong history of paying dividends, this dip in price could be a chance to lock in a higher income stream while the stock is undervalued. Just like NWN, Universal Corporation is all about steady income. Ensuring this is its strong dividend yield of 6.08%. It's an even bigger return for income-focused investors. The company has also been growing its dividend, though at a modest pace of 1.25% per year. It's not the fastest-growing payout, but the consistency is what makes it valuable. For stock performance, analysts forecast an annual return of about 2.08%. Remember, this is not a high-growth stock. Universal isn't built for rapid gains, it's built for reliability. Now, while UVV plays a crucial role behind the scenes in the tobacco industry, next, we'll introduce the real giant of the industry as our last piece of the portfolio. MO. Altria Group Incorporated, or MO, is also a tobacco company, and it would interest you to know that this one is a cash-generating machine with multiple strong business units driving its success. Most people recognize it for Marlboro, the dominant U.S. cigarette brand, but there's much more to its story. Altria operates across 3 main areas: smokable products, smokeless alternatives, and wine. The smokable segment, led by Marlboro, still holds over 40% of the U.S. cigarette market. Despite the decline in cigarette consumption, Marlboro continues to prove its dominance in this area. The smokeless division includes major brands like Copenhagen and Skoal, which are key players in the growing alternative nicotine space. And while wine isn't its biggest business, Altria's St. Michel Wine Estates gives it a presence in the premium beverage market. Now for the risks. There is no denying that the tobacco industry has been changing. Traditional cigarette sales are declining, but potential investors don't need to panic. Altria has been proactive in adapting to these changes. The company has expanded into the smoke-free market with acquisitions like Enjoy e-vapor and the On nicotine pouches. These moves show that Altria isn't just sitting back, it's evolving to meet changing consumer preferences. Financially, Altria's performance has been a mix of challenges and wins. In 2024, revenue came in at $20.44 billion, showing a slight dip from the previous year. However, net income saw a major boost, hitting $11.26 billion, a nearly 39% increase. This was largely due to favorable tax provisions that helped strengthen its bottom line. Altria stock also had a strong run in 2024, surging almost 30% as investors gained confidence in its ability to diversify and maintain high dividend payouts. Despite challenges in the cigarette market, the company's focus on smoke-free products and consistent shareholder returns has kept it attractive to investors. Now let's talk about why MO is a great pick for income-focused investors. Right now, the dividend yield sits at an impressive 7.41%, making it one of the highest among blue-chip stocks. That's a significant cash flow straight into your pocket. Even better, Altria has been increasing its dividend by 4.17% per year, ensuring that investors not only earn strong income today, but also see that income grow over time. Beyond dividends, analysts forecast an annual share price return of around 1.2%. While that may not be huge, when combined with a high dividend, it creates a compelling total return. When you put NWN, UVV, and MO side by side, one thing stands out. They're all dividend powerhouses. But beyond that, they couldn't be more different. NWN is your classic slow and steady utility stock. It's not flashy, but because it provides essential services like natural gas and water, its revenue stays predictable no matter what the economy is doing. UVV and MO, on the other hand, are in the cash-rich tobacco industry, but they play very different roles. UVV is behind the scenes, supplying raw tobacco to manufacturers. It doesn't sell directly to consumers, which shields it from some of the stricter regulations in the industry. MO, though, it's the heavyweight, owning brands like Marlboro and putting products straight into customers' hands. It's got higher risk, but also some of the biggest rewards for dividend investors. Now, when you combine NWN, UVV, and MO into one portfolio, you get a solid mix of stability, high yield, and consistent growth. The overall dividend yield comes in at 6.07%, with dividend growth 1.98%, heavily influenced by MO's strong payouts. Capital appreciation is expected at 2.77% annually, and you would have NWN's steady stock performance to thank for it. Together, this portfolio balances reliable income with modest growth. Now let's see what happens when you invest $10,000 in this portfolio. In just 5 years, your portfolio would be worth $15,600. Fast forward to 20 years, and everything gets exciting. Your portfolio would now be worth $73,000. This puts your yearly dividend income at $6,200, which is roughly $500 per month. But if you stay invested for 30 years, the power of compounding really takes over. Your portfolio would explode to nearly $270,000, and your dividends would hit $30,000 per year. That's an incredible $2,500 per month, enough to cover rent, bills, and still have plenty left over. And there you have it, the power of a rock-solid Dividend Kings portfolio. Whether you're looking for a little extra cash in the next few years or dreaming of full financial freedom, this strategy proves that dividend investing isn't just about collecting payouts, it's about building real, lasting wealth. Ready to kickstart your investment journey? Do share your thoughts in the comments. Like, share, and subscribe to the channel if you haven't already, and hit the notification bell so you don't miss out on future tips.